Hello guys, in this video I will try to show you what kind of stocks that can make a lot of money for you, because the stocks in the market are not the same. Okay, and that's why a lot of people they try to buy some kind of stocks although they go good, but their performance is too bad. Okay, so here I'm going to show you which stocks make more money and why. Okay, so the first thing I told you in general, okay, I'm not speaking about penny stocks. I say small stocks. These will make the most money, okay, in shorter term. Okay, in short term. So, an example. The example that I did for me, let's say I bought the stock nearly around 13 or 12 or something like that. It goes to 22 and I sold it when the stock, this is for the stock that I showed you before, okay? Now, these kind of small stocks, it doesn't mean it should be like penny stocks, okay? So $13, okay? $13, if you bought 300 shares, and let's say you make $9 in each share, this is your profit. So 9, you multiply by 3, okay? You will have $2,700, okay? But how much you spend? Okay, you spend $3,900. You see that? And this is the trade that I have done. So this is if you buy 300 shares. Okay, this is for most of you guys, you can't afford it because you only spend $3,900, and you get $2,700. It means $2,700 at a rate in general. Okay, I'm not be specified, but it's this is what I get. I get 59%. Okay. Now, if you have a bigger accounts and you buy 10,000 of this, okay, 10,000 shares of this stock, because the stock is very small, it's just $13. How much you expect to make? This is what I am looking for. I'm looking for small stocks that I can boost and they can, it means make me a lot of money. Now, smaller stocks in general, I'm just trying to be careful that some people understand what does it mean, because a lot of people think that smaller stocks, they think, for example, smaller stocks are always penny stocks, okay, which is, this is not true. So for example, if you have let's say $10,000 as your account, okay, you can choose, for example, stocks that are $15 down, okay, to $1, an example, okay. From 1 to 15, if you have $10,000, you can do a lot of trades between these prices. Or if you don't like more expensive, you can just see $10. But understand that while we make money from these kind of small stocks, there is a big risk because they are small. They can move sideways very quick. Okay, so using a stop loss and money management is very, very important here. If you don't know how to manage your account, you will be burned out. That's why I make a lot of training about money management. Okay, so it's not only penny stocks. Okay, it's not only penny stocks that you are looking for, but you can look any stock that it is small. Because a stock that it is, let's say 5, it can go to $10 in 1 week or 2. Okay, if there is a big push in few days, 1 week or 2 or 3, it can go whatever it goes. And this example that I give you, let's say from 13 to 22, is just an example, okay? I have made this for real and I have made a lot of money from this, but you can choose any stock that you want. Now, if you buy only 200 shares or 500 shares or whatever, this depends on your account, how much money you have, okay? And this could lead to a lot of money from this kind of stocks. And that's in swing trading, we just to follow the trend, any stock, okay? But understand that there are some stocks who they trend good, but they don't make money, okay? Let's say a stock is $10. After 6 months, it goes to $12. Okay, it's 20%. So you will never know. But there are some. I will just show you guys again from the thing. Is that there are some what we call sectors. For example, if you take let's say financial sector with all its with all its industries, most of the time are slow, okay, slow stocks. And you can check that in some charts. You find, for example, you find some stocks that have a very long trend like this, okay. Let's say this trend, you find like this a very long trend. The stock was 20, now is a 25 after, let's say, 6 months, okay. So although it is 6 months and you see, but the stock hasn't done that much, okay. It has done, let's say, 25% in this 6 months. Now for investors it is very good, but for us we want more, okay? Because understand that investors, when they invest for a stock or a company for more than 1 year, it's different from us, okay? So this is just an example, financial sectors. Now if you want to go to other kind of stocks like drug sector in general, drug sector overall, it's industries or internet, okay, internet sector, or computers like sectors. You will see by the way they move, okay. You will see by the way they move. And if there is, for example, let's say if there is gap up, yes or no, okay. I give you an example. The example I showed you for my trade is an example, okay. So the stock, for example, is moving like this, okay, and then it has a gap up here and it's moving, and then it has a gap up here and it's moving. You see that? So you see this excellent stock, a gap up here, a gap up here, okay. These kind of stocks are very, very interesting when the stock is not just moving very quick or very fast, but they have gap ups and gap down. And there are a lot of sectors they do this just to check the history whenever you see a stock, okay. So there are there are many examples like this. And for me, when I find a stock that it is gapping up, which means there are good news always, so I will stick with that stock, because in the future, if I have if I see one gap or two or three during 6 months or 8 months or 9 months, and I see a lot of gap up, I can make a lot of money from it. Okay? And if you, for example, if you go to the chart again, you looking at my trade that I have done, you see that the stock have 1, 2, 3. Let's see here, 3, 4 gap ups where I bought it. Okay, so we have 1, we have 2, we have 3, we have 4, but it can have gap down. So this is possible also, and this is part of the risk if you are doing swing trading. But for me, as I told you before, I exit early. I will show you in the live trade. When you go to see my live trade, it's 30 videos. You will see where I exit. But you tell me, for example, someone tells me, oh, you wait and then you wait, and then when we have the stock goes down, and then you make a video and you say I exit here. No, I make it live. It means when I change the exit point, it's weeks before. You will see it where I put it. So there is no, it's not a trick or something. It's a real trade. That's why I'm not doing like everybody else who are just, for example, telling you the history of a stock. Any stupid person can show you a stock and they say, oh, I have done this and I have done this. Okay? He just explain whatever and you accept. No, for me, this is a live trade. This is 5 months and 2 weeks. Okay? And in my next video, the next live trade that I have done, it is another stock. So please, I will make another video explaining the other live trade. So thank you very much. Thank you very much. The main thing, what I'm showing here, is the real thing. It means the real practice. You are not just getting a training like theory training. I don't do theory training. When I give you a theory, it means I just showed you the techniques. It means something that it is, you just go directly and apply them. Okay? I have never, for example, just take the decision and just exit the trade without giving you an explanation. When I exit a trade, I will give you an explanation why I did that. Okay? In this live trade, you will find this trade that I have done for 30 videos, and I will show you how to change the exit point, and I succeeded in 6 months to weeks to do that. This is an example of what I do, but it's not that all my trades are 6 months. It depends on the stock when it stops. Some they stops on 1 week, some on 1 month, on 2 months, 6 months, 8 months, depending on which stock I am in. But understand that a stock has a life. It means the trend has a life. And then when it dies, it goes down. You can do the same using, for example, a downtrend, and you can do that. But for me, I don't do down trends with shorting the stock, because especially small stocks, because sometimes they have some news and they go up and you could lose a lot of money. So be careful when you are shorting stocks, especially in swing trading, especially when the stock is small. When I made a training level 11 about how to short a stock, I make many videos explaining the risk, because you are not going to do a risk that makes you your trade have you problem of debt. Okay, and I showed that because some people they short some stocks that are going down. They are $1, $2, $5, they short them and they hold them overnight. This is not a good idea. And in my training level 11, I explain this clearly and to the point. So when you are going downtrend, you are following a downtrend, it's better to do like with inverse ETFs that I have explained in my training level 18, how to short the whole market or to the whole index or ETFs which follows indexes. I showed you this training is when the index is going down, your ETF will be going up and you will be making money when any ETFs is going down, and this is very good training if you want to check it. Okay, so rest assured that I will try to do live trades, put them in my subscription, and those people who are like interested to see how I do it, how I follow stock, it will be a good practice for them. And especially in now we are in 2017, we are at the end and we are in Christmas time, so you should be beginning fresh from 2018 and have new ideas in order to make money. Thank you very much, and see you next video.